Testing, testing. 1, 2, 3. Testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Today is Monday. Welcome to Forex.Today. I highly suggest we go through the calendar looking at the events risks for the week, catch up on our swing trades, catch up on our fundamentals. Just ask questions. I'll do my best to give you what you need to get the job done. 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I just realized these guys are talking, so let me turn it off. Sorry about that. All right. Hey, good morning. My name is Wayne McDonald. I'm a currency trader just like you. So let's get on with it. What do you want to do today? Technical analysis, fundamental analysis. Go through that event calendar. Yep, and yep. So ask questions, get involved. I will do my best to address the question. Here's the interesting thing. Someone might ask a question. It takes them 1 second to type it out, maybe 4 seconds. I might see it and then give a 20-minute answer. Meanwhile, there are 400 more questions. If I don't answer your question today, I'm sorry. I didn't even see it, so it's not you. I'm not mad at you, that kind of stuff. But I've been doing this for 15 years every single day. So if I don't answer your question today, maybe I can answer your question tomorrow. Therefore, make sure you subscribe, right? That way, when I click the stream button, you are alerted and brought into the live stream if you happen to be available. So please do that. Also, while you're there, can you click the thumbs up button and tell YouTube that this is quality content? That's it. You're just saying, hey, YouTube, this is quality. That's one of the matrices that they use to decide whether they promote it or not. Okay, so if you find this is quality content, please reach out and click the thumbs up button. All right, so you're going to ask questions. You're going to take notes. You're going to treat each other with dignity and respect. Cool, that's pretty good. I will try to address technical and fundamental analysis. We'll try to set up some trade plans. Sounds like a pretty good morning, huh? So all these things that you're going to need to be able to do, you're going to have to understand fundamentals. You're going to have to understand technicals. You're going to have to be able to put these two things together and create trade plans. And you're also going to need a broker that you trust. And Traders Way has earned my loyalty and respect, so maybe you can give them an opportunity to earn yours. Please visit tradersway.com. Bottom right-hand corner, there's a form to create a demo account. 20 seconds later, you're in the back office, and then you can download MT4, MT5, that kind of stuff. And check it out. Fast execution speed, narrow spreads, wide swaps, world-class customer service. Tradersway.com. And I just realized my coffee's up here. Oh. Good, yeah. So let's start with the indices. Pete says, hey, it's 1 hour later for us Europeans. Yeah, but that'll change, right? When does Europe change its time, Pete? Okay. Yeah. Do you have any idea? It's not that far off, right? All right. So anyways, Aussie strong, Euro weak. CAD, meh. Yen was strong, then weak, and then sort of in the middle there. Pound very strong, Kiwi very strong, Swissy weak, dollar So when you don't really have a strong or a weak funding pair, very often this is the day you should be doing cross pairs. Oh, you guys said it happened yesterday? Oh, okay, so then there's no problem, right? A few people are making time comments like, oh my God, what? But it seems like everything is as it should be. Anyways, so pound Swissy looks like a good one. Okay. So pound is stronger than the euro. Pound is stronger than the Swissy. Pound is strong, well, as strong as the Aussie. Pound is stronger than the yen. Pound is as strong as Norway, the crown. And pound is stronger than the US dollar. So pound is strong across the board. The best one right now is probably this. Let's take a look at it maybe on a 15-minute chart. Look at that. What a hot open, huh? Up, 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 down, down, buy. This is a role reversal. Okay. Another way to look at it maybe is let's take a look at, let's do position trading bullish first. Okay. So at the very beginning of March, we had a buy. The target was way up here. We haven't hit it yet. And here we are in the last week of March, and there's already front run in play. And a new higher high. Similar to this one. Okay. So we got a very nice bullish move here. Currently, because last month was bullish, but not crazy bullish. See, like we were supposed to go up to 133. Okay. 800 pip move. But we didn't. We didn't even get close to that. Maybe halfway. So in this case, the pivots are showing a step up, but compression. Okay. So maybe to see this on different time frames, we will plot this like that. Okay. And then you drop from a 4-hour to 1 hour. Okay. Here's your London Open. Okay. Let's change this now. So you'll have to remember 128 to 128, 128 to 129, let's say. All right, so switch this now to bullish swing trade. Okay. And we're out of position on this time frame. Okay. Where do you buy when you're out of position? Where do you buy when you're out of position? Four-hour 21. You mean here? Yep. You're like, but it didn't touch it. All right. Insert indicator, custom, zero lag moving average, red. I think we changed the input. Nope. And then shift it 4. There it is. See? Cool. Very nice. Very nice. Okay. Or the 4-hour SMA. Yeah. Yeah. Oh, yeah. Yeah. So the way really, this is where people that only trade small time frames may get lost. Of course, not everybody, but most. This is the setup here, and it probably will last a fair bit of time. Okay. On a daily basis, we just kicked off the 21. Isn't that interesting? Like that's all it is. So from this point of view, I call this strategy. Because it's the basis for all the other moves. So now, on a daily basis, you're going to see throughout the day, you're going to see price do stuff like this, back and forth, print the high of the day, and then close here. And then the new candle comes up, and then it does this all day. And then it closes here, and then the new candle comes out. Okay. And then the new, right? And because of your strategy, you're not really interested in this move because it's already happened. You're interested in the retracement throughout the day, which could be a Fibonacci retracement, for example. And then you take the new one. Well, you're already in the new one, so it doesn't matter. It's not what you're interested in. You're interested in buying the dip again. Okay? So that's why you use things like smaller time frames, like maybe a 4-hour or a 1 hour, because you already have the strategy thing done. You did it on the daily. And so now you buy dips. Okay? And on a 4-hour, right? What you're looking at is, I don't know, I guess we'll just pick a time here. Right. You're looking at little moves like this. Okay. You're looking at little moves like this. It's not that it's going up that's interesting, that it's coming down that it's interesting, because you buy dips, because your strategy is solid. Because your strategy is in play, you're like, this is kicking off the daily 21, so I'm buying dips. So you're identifying dips, roll reversals, okay, pullbacks, okay? And you're using all your tools and all your methodologies to identify these pullbacks. Why? Because you have a strategy. And the strategy is buy dips. So every single tool you have, I don't care which one you use, can be completely different from me. Okay? I used to use RSI, so maybe you use RSI. I understand. Okay? So you like RSI and you like CCI and you like the Rune oscillator or the Gator, whatever, dude. Right? But you're using every tool and every resource in your power to buy what you consider a dip. And with that kind of thinking, you'll be better off in the long run, because a lot of people are making many choices here, buying and selling, when to me, really what you have is you're buying off the 21. It should go up for quite some time. It's bullish and aggressive. And, right, one of the things we talk about, I think at the very beginning of the day trading course, is that we live in the wicks. You will find us like ninjas hiding in the wicks. Right? Day traders don't trade candles, they trade wicks. And when you get to that aha moment, you'll get to the next level. You're like, it's all about it. So let me give you an example. I don't think I can zoom in any closer than I am now, but see the high of yesterday and the low of today? That's it. That's your setup. Okay? So in the anatomy of a candle, you have the high, you have the low, and you have the close. And of course, you have an open. So how does that work? High, low, open, and close. Okay? So, what is it? Is it a green candle or is it a red candle? It's a green candle. Okay? So it's not a very helpful candle because, let's do it this way now. It would be drawn like this. Okay? Because it doesn't give us a lot of direction, but it gives us some direction. But if you get a candle that looks like this, is that helpful? Depends on the high and low and the close, right? So if this is the open and this is the close, then you've gotten yourself into a green candle. Okay? But here's the thing. A Fibonacci trader is now measuring this from here to here. 0%, 100%. So they might see this as a 382. This is a 50%, right? This is a 618. So how would a bull treat a scenario like that? Okay? They're going to buy a dip. And you get yourself a new green candle. So here's your open. Here's your close. Okay? Or that could be the high, and then your next close might be here, let's say. So let's change that. So your new candle would be a square bottom. Went a little higher, and then it came back, and then closed here. So you'd have a new green candle. Okay? So my point is you look for the highs as a bull. You look for the highs. You don't trade the highs. And your money, your patience, and your discipline is trading these wicks. Well, let's change a color. It's easier to see. I guess purple. You're supposed to recognize what might be the high, let it pull back, and buy the dip. Let it make a new high, recognize where that high will likely end. So like key pivot points, for example, key psych levels, and you want to look for this dip. Okay. So you're more interested in these purple ones. You're more interested in the down during an uptrend. Okay. So it's the wicks that are important to me. You'll find out a wick will develop in very key places. So let's say I'll make up a line here. Let's say, well, okay. So let's say this is resistance. Why? I don't know. Doesn't matter. It just is resistance. Okay. A bull, let's do this in sort of a greenish tone. Okay. We're looking for moves like this, correct? So understanding that price is likely to hit resistance and then have some sort of pullback is helpful, because hitting resistance is not a buy, but catching the pullback. So you're looking at wicks here, right? So, right. So you look at things like, what is this roll reversal going to be? Is there another psych level? And your new plan now is, use all your tools to identify how price might behave in the future. And these sort of dotted arrow is kind of like the potential for the future. Where will it hit support? Where will it go up? How big will the upper wick be? You could have like this, but this is rare. Okay. You can have this. Okay. Or you can have this. How big the wick? Is it a 0%? Is it a 21.4? Is it a 50%? Okay. You don't know. So you have to say, well, where is the roll reversal? Where's the next psych level? Okay. Morena says, well, what about a wick with no candle? Okay. Well, that tells you, no wick, right? A candle with no wick just tells you, for example, the close is at the high. That there was no profit taking. So the way I look at wicks like this is they're not created by sellers, right? In green candles, we're looking at green candles here. Okay. In these green candles, the wicks represent profit taking, not sellers. So there was no profit taking, which means you're not likely to be at resistance. Okay? Which would say most of the time, depending on the situation, like you can have them so they're so stretched out that they get cut like an Arctic turtle. There's different scenarios, but generally what that would tell you is in that time period, there was no profit taking. Okay? So there's no sellers at all, not even bulls getting out, not bears getting in, no selling. So there's no real opportunity as a bull, because you'd be forced to buy high, but we don't buy high. You understand? We don't buy high. So you can't do that. But it does tell you that for whatever reason, there's no bulls and no bears. No bulls taking profit. Okay? And the ones that are buying are probably foolish or unbelievably confident. Either way, it's not ideal, right, Marina? So what I like to do, though, I like to buy the trend. I don't want to buy at the top. I want to buy a trend. I want to buy a higher low in an uptrend. And so I'll spend most of my time thinking about where's the target, where's the next level of resistance. Now, in some cases, that might tell me if I'm already in a trade that I must exit my trade. Maybe that's a weekly R2. Maybe that's a monthly M4. Maybe that's a daily R3. But for whatever reason, resistance might be where I bail. And part of that wick is me leaving, selling my uptrend to somebody else. Hey, man, I've been in this uptrend for 4 days. You want to buy it from me? Okay. So I'm selling it. I'm not selling the market. I'm selling my position. Doesn't mean I'm a bear. Doesn't mean the market's bearish. It means I want to take profit, sell my risk to somebody else. Okay. And other times it's just a blip along the way, a bump in the road. So I'll say, well, I want to buy the next higher low. Is it going to be 50%? Is it going to be 618? Is it going to be 382? And then I use all the tools I have to try to estimate where that is probably going to be. We're looking at the probability of this making another higher high. So if it makes a 382 and starts going up, the probability is pretty high we'll make a higher high because no bears were attracted to the position and bulls got back in. So it's more attractive. Therefore, it's got a higher probability because it's got new money coming back in to make a new higher high. So the next candle is created. And then sometimes you get to resistance levels that have high confluence of resistance, meaning bulls are actually thinking about taking profit. Okay, they're thinking about it. They're thinking about it. They're thinking about it. And bears are ready, willing, and able to drop a lot right on top of you. Okay, so that's a real battle. And some of that is stop hunting by bears, right? Trying to force bulls out at obvious levels of resistance. So you got to know where those are, and that would be not where you want to fight, but where you want to bail. Okay? So we live inside the wicks. Okay? So this is why I start with top down. I mean, real top down. I start with macro first. Okay, that gives me bias. Then I will open a chart like this and say, sell? No, impossible. You see that? You look at a chart like this and it's impossible to sell. Now, someone might come along and say, well, Wayne, I think the market's wrong and this is going to hold as resistance. And I'm like, okay, but I'm not going to take that. It's not what I do. So if I was going to be a bear, we're going to need at least some bearish price action. So I don't like selling highs. Okay. I need to see a reversal pattern here before I become a bear. But I don't want to become a bear because of my fundamental bias. So my fundamental bias is way ahead of all of this. Okay. Way ahead of all this. My fundamental bias says Swissy should be weak. Today, tomorrow, yesterday, next week, next month. So now I just say, do I like to buy up here? Now, I'm not too worried about it because we just talked about probability, and this is a nice reload off of a daily 21. So that tells me we are probably going to go higher. Okay? But I don't like buying at resistance. That's why this is important. That's the setup. Okay? So now how do we get into this a little deeper? Okay? And there's your sort of tricky role reversal. It's tricky. Oh, yeah. Oh, it's tricky. Okay? If you didn't get it, I understand. If you got it, you were sharp. But look, when you get away from the technicals, okay, let's do this. Indicator. Let's just get rid of pivots altogether, for example. Okay. And let's get rid of these big moving averages. Who cares, right? Or medium moving averages. I want to show you that this stuff is helpful, but it's not the basis of your trading. Okay, we got a triple bottom, and you're already a bull. Do I have permission to buy? And so now what you do is you look at like key psych levels. Oh, this is 28, 128, okay, 129, and we're at 130 now. Okay. You see how we're just bouncing around these psych levels? Right? Like you don't need the most advanced AI in the world analyzing 1 billion variables every second. Like, dude, buy the dip, bro. Buy the dip. Well, which dip? Yeah, that's your job. But at least now you know your job is to buy the dip. And you're like, which dip? Yeah, that's right. That's why someone would hire you. Okay? But trying to figure out that this is bullish fundamentally and on long-term technical charts is not a complicated matter. Okay? Okay? Look at all these roll reversals. There's little trades inside the bigger trades. And are they perfect? No, dude. Right? Are they perfect? No. There's some beautiful trades in there, but you're not likely to see perfection in Forex. Even supermodels get zits. Okay? This is not perfect, but it's beautiful. Perfection is probably an illusion, a fantasy, a mirage. Take a look here. This is a 15-minute chart. What does the green zone tell you? You should buy. Huh. Whale oil B. Well, how did you know it was bullish? Maybe this was a bottom. Maybe this is up, right? Like how did you, what? Dude, look at it. Beautiful, huh? So you can see we are thinking up, and it's not quite a 382. I wonder, it's not a 786. Wonder where it's coming from. Yeah. I don't know what to measure there. Long and gone. Luffle till you mum. Just this nonsense here. And then roll reversal here. No. Right? Cool. So what are you going to do next? Well, remember that pound Swiss I just showed you how it was messing, right? Range for a while, break out of the range for a while, breakout. Hey, remind me, my swing traders in the swing trading group last week, didn't we talk about, it seems like something we might have talked about, where we talked about range, break to the upside, range, break to the upside, range, break to the upside. Was that the swing trading group? Oh, it was here? So, again, not perfect examples, but definitely examples of that kind of behavior. Okay. And look at the amazing analysis I did. 128, 129, 130. So obviously, if you use better tools, you could probably get more accuracy. Okay. 129.50, 128.50. You see, guys? Every 50 pips. Double bottom, psych level, up, right? Up, boop, boop. So whatever. Range before reversing. Thank you. Thank you, Gary. So here's the more complicated one. You can see what I wanted, and I got a 786, and I got to be careful here. What this is telling me is dollar's not the play yet. We still haven't completed a rotation from yen to dollar. That's one of the themes we've been talking about, and right now that has not happened yet. I'd be remiss not to mark my charts properly, and now I have to see, are we going to range? I kind of like the probability here, okay? I see that. That looks legit. I get it. It's farther down than I would have liked it, but I get it. I could see that. So what happens next is supremely important. Okay? I don't even think we'll get that. I think we'll get... Okay? So, yeah, I'll catch the next wave, catch the next bus. Okay? It's a long journey. Miami to Denver. Cool. Interesting. This must be an example of the sideways first. Up, down, up. Probably could refine this slightly now, but so far the bottom's great. So this is the trade plan we had on Thursday, right? So far, so good. There might need to be a revision, like maybe it kicks off up here, 83.50 instead of all the way back, but whatever. Right? Like what I'm saying is this might be legit too. But this is what we did on Thursday. Cool. So far, so good, right? It bounced on our line at, what do you want to call this, 82.5? And now we're at 83.5. So more than that. So we're up about 120 pips off that bottom. Huh? Okay, cool. So are you a bull or a bear? I don't know what your answer is. I don't even care, as long as you know. The second thing is, what do you do now if we've kicked off of a support level? Maybe you buy the dip. What dip? Exactly. You're like, tell me, Wayne, tell me. No, it's your decision. You said you want to buy dips. Good. Go find yourself an opportunity. Okay. Maybe you said right at the London Open, you couldn't resist. You couldn't resist a 3A2 buying it at 83.50. Okay. You just couldn't resist it. Beautiful. 3A2 Fibonacci retracement. You already know you want to buy, so that's not complicated. You know you either buy in Asia or you buy in London. Okay? Now, we also know you don't buy high, so you can't buy in Asia. So it comes down, you walk into London at a 3A2 and you're like, oh, I got this shot in my bag. Okay? Why? Because you're not trying to decide what to do. You're only trying to decide when to do it. There's a big difference. I think those that struggle show up every day not sure what they're going to do. Rookie says New York would be too late. Yes and no. It's never too late to do your job. Okay? One thing that I've taught over, the decade and a half that I've been teaching is that if you are patient and disciplined, Forex loves you. That's why you need to learn how to be patient and disciplined. So if you miss it, you wait. And very often those who wait will be rewarded. You will get a dip. It will come back for you and give you a second chance. So you always do your job. You're always ready, willing, and able. You don't know exactly what the market's going to do. You don't know exactly what the enemy's going to do. But you're highly trained, highly armed, right? Ready to adapt. So you adapt. If you miss it, wait for the next one. I think we've all tested where you're in a bit late and you get in anyways. And you're like, well, the difference is only 30 pips. And then you find that you get punished by that pullback. Okay? That's why if you're patient and disciplined, you'll say, oh man, this is so great. I missed it, but the market came back for me. Thank you, Forex. And then you place your trade where someone else has to take a negative 30, negative 40 drawdown, waiting to get in, instead of waiting to get in the trade, they're getting in the negative, right? Because they were not patient and disciplined. Very often that'll print a losing trade for you because many traders here can't take a 40 pip loss. It's too big, right? But also, what is your average winner? And you might find where if you go negative 40 and then you got to go plus 40 just to get to break even, and someone else was patient and disciplined and got in a better price, and now you've made no money because you were not disciplined, and now they're up plus 40, who's going to be able to take profit first? So now they might be up, let's say 65 pips, and you're only up 25 pips, and you're like, I can't take a 25 pip winner. It's too small. And they're like, well, it was just a little pissy little day trade, and they could. 65 pip winner is not a high fiver, but sometimes you're picking up pips and putting them in your pocket, depending on the time of year, right? Okay. Remember, you're looking for the wick, not the body of the candle. If you're trading the body of the candle, you're too late. Okay? You're late in the sense like you should have bought hours ago, or you're too early in that you might have got an okay price, but tomorrow. Because for example, let's do it this way with arrows instead of candles. Oh, I wanted that green. Let me do this again. Okay. Depending on the time frame, okay, there's no trade here if it's like a 15-minute chart or a 5-minute chart, but on the daily there are. Because again, what I'm trying to teach you is when you sit up and take notice is this period. This period. So when you see a giant green candle, if someone's just entering a trade here, they're not trading properly. And most likely, at best, they'll be break-even traders. Has anyone here tried this strategy? I think it's actually taught by gurus. You wait for the break. Has anyone been taught this? Has anyone tried this? Go on, there's 150 people here. Has anyone run into a strategy like that? Wait for the break? Even 15 years ago, people were taught to wait for two candles to close above that before you buy. Really? No? That's not taught anymore? Okay. So here's the problem, and this is why those traders most likely break even. because they get knocked out on something like this. Okay? And that's it. They're out. Well, here's the funny thing. I thought you were a bull. I thought those traders were bullish. Oh, they were. They bought it. Well, it hasn't made a lower low, so why are they out? Well, they bought too high. They were up 25 pips profit. Then they jammed their stop. And then it came back and it knocked them out. So that might be break even. Okay? At best. What I mean is at worst is that they also don't have the discipline to get out or back in or whatever. Like they're doing so many other things wrong that even a situation like this over the course of, let's say, 100 trades, whatever the sample size is, there's also mistakes beyond these break-even trades. And you're never going to be profitable if, that many of your trades are break-even. I don't mind break-even when you're breaking even correctly. This is a great trade done poorly and does not lead to success. And if anything, it'll force the trader to change their behavior in a negative way. And they'll pay the consequence there. So what do we know to be true? Like, what's the next candle? This person just got knocked out. Let's say break even. The next thing happens here. They were in a good trade. They were up 25 pips. It came all the way back. They broke even. And then, sure enough, just moments later, it skyrockets back up. And they were in a good trade, but their broker hunted their stop or some whiny nonsense of an excuse. Where I teach is trade this pullback. Trade the wick, right? Trade inside the wicks. Which means you always can foresee the future. When you see higher highs, you're like, oh, that is so awesome. That is so awesome. Look at that higher high. That confirms my fundamental bias. That confirms the trend is in place. I can't wait for it to slam into resistance and come down so I can buy it. Other people just jump in. They're like, oh my God, that's another green candle. And they're in. Okay. You know what I also used to see back in the day? For some reason, people would sell higher highs. It was like a common theme that just newer traders would be sellers in an uptrend. This whole idea, oh, it can't go higher. Really? Like, why not? Okay. So anyways, so hopefully that was a helpful refresher or maybe an eye opener, depending on how long you've been trading. Could I be so bold as to ask for you to click the like button? 2/3 of you have not clicked the like button. Would you please do that for me? Or for YouTube, really? Cool. So let me get the calendar. Let's use the one on Trader's Way instead of Forex.Today. Let me see if I can find it. Bum bum bum. All right, so yeah, it's all right. It's got some pluses and minuses to it. I like the one on Forex.Today where you can just say look at today or just look at high value news and stuff. But this is nice because it gives you better overview. So we'll use this one. Oh, save that as a lesson. Which one did we do? Candles? I'll see if I can. Hang on. I don't know how far back I have to go. Okay, I guess create clip. I'll create a title. Trading Forex candlestick pattern, candlestick and wick. How about candlestick patterns trading Forex candlestick patterns inside the wicks. Inside the wicks inside the wicks day trading strategy. How about that? All right, we'll see if that does anything. Cool. Wow. So half of you have not clicked the like button. Wow. Well, all right. All right. Japanese retail sales and employment and stuff. I don't think that's going to affect yen yet. So I think that won't matter too much. I mean, obviously, all this Bank of England stuff's already come out, so that's already been priced in. A lot of German news, import-export data. This is important because they're the largest exporter in Europe and third largest exporter in the world, I think. Pretty amazing. So this will be, I suppose, a sign of European recovery. Are they exporting and are they importing? And the interesting thing is, if they're not importing, it may be because they don't have any money. Right? Richard, are you in my macroeconomics class? That's exactly what we're doing. So we're comparing different types of growth through the solo growth model, so that we can compare similar economies and make decisions. So anyways, Norway, South African rand, money supply, those shouldn't be big movers. Spanish CPI, none of these too big of a deal. This one might be interesting for the rand, huh? Describes the current economic situation in the country and around the world. Yeah. Published by the South African Reserve Bank 4 times a year. There's one. There's one. There's something that looks pretty interesting that you could be doing. Put that on the list. Oh, you're trying to get there, Richard? It's only money, bro. I mean, I'm doing it for free for swing traders, but I'll probably redo it again this summer. But for money. Not a lot of money, but you got to be there, be square. Nuno, how do we get access to it? It's in the War Room video playlist. Okay. Okay. So, like the last 2 weeks, we spent 2.5 hours going through a growth model. Okay. The thing is, you have to look at growth, consumption, savings rate, investment, depreciation, right? And then being able to influence by your, you know, your level of reinvestment into human capital, not just physical capital. So, like, how much do you educate your workforce? How much entrepreneurialism is built in? So, like, when I do this, for people that have gone through the course, they're at this point now where I say y is equal to 2.0 times the square root of, how did I have it up here? I guess 5. I guess I'll just make it up there. Okay. And someone will say, well, that's interesting because to get the 2.0, you'll have to need a proper EL, but also add A to it. And the A is, right, is going to keep you out of your steady state. And this square root of 5 is obviously the diminishing returns of investing into capital, both physical and human. And for someone else that doesn't know macroeconomics, they're like, I don't understand any of that. Whatever you just said is so far beyond what I can comprehend that it might as well be gobbledygook. Well, everyone that's gone through the course so far, the free course, looks at that and they're like, oh yeah, I totally get that. Okay. So that's what we've been doing. I don't think I'm going to do one tomorrow, guys. I might, but I don't think so. And then next week is Easter. Okay. So the markets are closed next week. Don't be around Monday. I don't even know. Good Friday. Is there a market for it? Is NFP going to come out when the markets are closed? I have to look at that. But so there might be a 2-week pause in the macroeconomics courses, and then we'll come back and do the business cycles. It just really probably will go down like that. Okay. Oh, Richard's trying to do the hours of videos in boot camp. Yeah, and then just join the live trading group, the swing trading group. Cool. All right. So what was that, Wednesday? The South African Rand data comes out? Okay, cool. Okay, Fed governor speaking. Hey, why are they speaking? They want to tell you something. They want to give you a hint. They're thinking things like, oh no, they misinterpreted the change in the dot plot, so now I need to come out and explain it. The funny thing is people don't do their jobs and they don't listen to the speeches, and so they invest poorly based on assumptions. Am I holding the NFP on Friday? Yes. If they're asking me to show up, I will show up. It may actually be the 15th year anniversary. I think, right? Or is it the one after? We're getting pretty close to 15 years. Yeah, I'm just wondering, can somebody Google well, I guess I can do it right here. New York Stock Exchange. Let's just go. La, 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 la. Where's their calendar? Man, it used to be easy. I haven't been here in a while. Come on, ICE. I'm missing it. ICE messed it up, huh? All right. Calendar, I guess. Holiday. I just need the holiday schedule. There we go. Yeah, the markets are closed. Well, I'm going to cut it short then. I'm going to let FX Street know that I'm going to pull the plug early. Like there's no stock market open, so when I don't trade in those conditions. Interesting. U.S. banking holidays. No, the Fed's holiday. That's cool. Let's do this one. All right, so the banks are open, just not the markets. So interesting, so confusing. Okay. Well, it's not the liquidity. I mean, it is the liquidity, but what it means, like the real reason, it's not like, oh, if it was a liquidity problem, I'd say, oh, well, it's going to take me like an extra second to fill my orders and I will be hurt by slippage. Well, that's not the issue. The issue is the technical analysis is less reliable when there are less market participants. So I don't want to trade when my analysis is less reliable. Okay. So I might take a hall pass on that. Okay. So we got the Case-Shiller indices coming out. Should indicate that we're running hot. It'll also show that inventory is low, and it might show it through high prices but low turnover. But the low turnover would be a lack of supply. Yeah, that's what I thought, Daniel. So zippity-doo-dah, zippity-yay, 180th. That sounds pretty important. Okay. Rollover rates or swaps, Richard? Okay. Okay, so where are we now? Wednesday. European CPI. Okay. Yeah, keep an eye on that. European CPI. Important, but, important, but bigger things going on in the world. But it'd be interesting. We'd like to see some growth there. But if euro's going up, that's deflationary. Okay. Here's a lot of information coming out of India. So, you can't trade the rupee, I don't think, but I don't. But you might want to look at like current account data, trade balance data, and then see if they are still filling the vaults with treasuries and gold to devalue the rupee. Okay. For us, ADP, another dumb prediction, is on Wednesday. Okay. And why the negative number, really? That's strange. I guess it won't tell me why it came out that way. Negative. Interesting. Okay. Interesting. Okay, I wouldn't have expected that. Oh man, it keeps putting me way back here. Okay, we got to go all the way back here. All right. Where were we? Where's ADP? So we did this. ADP. Okay, good. Then we move on to kitty cat GDP. Okay, once again, backward looking, but we want to see movement in the right trend. I really like Canada. Should be doing well, but we're still a bit in the rut. Okay. Soon you'll see really good numbers, but we're still kind of clearing the glut of bad numbers. 10 o'clock, again, we're looking at pending home sales. The issue here is prices are up 10%. Okay? Right? Even in my backwaters, a part of the United States, housing prices are up 10% year over year. So why do you get prices to go up? Well, either demand showed up, suddenly people want to get out of their apartments and buy a house? Well, COVID doesn't do that. So what's happening? There's a supply issue. There's not enough supply, so prices go up. So anyways, prices are going up. So pending home sales numbers are going to be low, but the prices are going to be high. Okay? Wednesday is also oil inventories day, so you might start to see maybe, I think it's too early to see U.S. producers offsetting the shortage because of the Suez Canal blockage. So, yeah, probably a benign, but probably within trend. If you're an energy complex trader, your job is to pay attention to this and look at changes, right? So Wednesdays are big days, and then Fridays are big days if you're an energy trader. Fridays, you need to look at the rig count. And here, you just every week, you want to get an update on where we are. I don't really care about the change in supply per se. I mean, that might move the market for a few hours. The problem is that most amateur traders that are trading even this, and even an amateur trader trading oil inventories on Wednesday makes you even, I mean, most amateur traders don't even go that far, right? Wow. So like that already puts you into sort of a higher level, another echelon, right? Echelon if you're doing that. But what you should be doing is having the EIA email you reports on a weekly basis. It's called the weekly something update. Or you go to the website and find it, and it shows you not just the change week over week in supply, but it'll show you the average for this time of year, and of course the average through seasonality. So if you look at the energy complex over the course of an entire year, there's an ebb and flow of supply based on their assumption of future demand. They have to build up. See, you need to buy crude oil to turn it into gasoline and jet fuel and plastic and tar and all that kind of stuff, right? So you have to buy it and then make it and then put it into inventory to later then sell it. So they're front running the market. So they're doing stuff now predicting what's going to happen. And they're predicting demand for gasoline, for example, starting in June, July, August. They're building up for that now. So you might see a buildup in inventories that are unexpected. So now you might sell oil because you're like, oh my God, there's a build up. But then if you take it out of the context of seasonality, you expected that build up anyways. And it really, any build up or drawdown, let's say, is not necessarily tied to the canal being blocked. Maybe it is, maybe it isn't, but you need to have more information than simply saying, this is caused by that. It's too easy. And you're going to get it in the newspapers, by the way. This is caused by that. See, look at the data. There's more to reading data than that, right? So you might want to say, is the change good or bad relative to what I would have expected anyway? So think about the trend, the seasonality, in oil inventories as the beta, and now you got to throw it down. Okay, now you got to throw it down. Where are we? What your alpha is to say, was that expected or not expected beyond the expected? There's the known unknowns and the unknown unknowns, and it's how you pull those apart and then trade them against each other that matters. So anyways, Wednesdays and Fridays as energy traders are your big days. Okay? Tenkan survey, very good. Okay? Shouldn't move the market, but it's good insight, actually. Korean import-export data, again, macro traders are concerned. That's good. For example, are these numbers true? Trade balance, okay, positive trade balance of 2.6 billion last time. Now we're expecting 3.5 billion, so 900 million more exported. Well, that's fantastic. Good job, Korea. But what does that mean? They're exporting products, but increasing demand for their currency to get those products. So the Korean won should go up. But also, who bought $900 million more from South Korea? The rest of the world did. So what does that mean for global macroeconomics? Are they freaking out, or are they upgrading their Samsung? Okay? Hyundai sales are way up. Okay? That kind of stuff. So pay attention. Like, that would be something you throw down in your macro, and you're like, oh, okay. And imagine now you're talking to a client and they're asking you a macroeconomic question, and then you're like, oh man, let me give you an example. I was watching Korean trade balance, import-export data, right? And it went up by almost $1 billion month over month. Doesn't sound like a lot, okay? But it was a 15% increase month over month in exports. 15%! Oh my God! Like, that's massive. What does that mean? Things are getting better. We got to get the reflation trade going on for you. People are buying Samsung. It's not because they're poor. It's not because they're dragging their fingers through the dirt looking for seeds to eat, right? No. They feel comfortable buying a $1,000 Apple iPhone for only $600. We call those Samsungs. So cool. They're spending the money. They got the money. They spend the money. Okay, so that's really cool. So that's how you close a deal, by the way. Cool. Aussie home loans. Okay, we know there's a lot of problems going on in Australia. In two things, they're struggling in real estate. The second thing is we want to see an improving trade balance. Okay. Their trend is down. What? Check it out. Australia lost about $1 billion in exports. Korea got about $1 billion in exports. Okay. Korea just whooped Australia's butt, took $1 billion out of their pocket. Well, that's not really true, but Australia exported $1 billion less, and South Korea exported $1 billion more. Okay? So maybe $1, $1 Aussie, you got yourself a trade there. So anyways, this is trending in the wrong way. Korea is trending in the right way. Okay? Retail sales negative. What the hell, Australia? What are you doing? They're not buying Samsungs. Okay? Does this impact our desire to invest heavily into Australia? Yeah, well, maybe. Okay. And what do you want to do Thursday? Lots of negative numbers, lots of bad numbers. Europe is drowning. Okay. PMIs are all pretty good, though. Except Spain. All right. So anyways, that's probably not going to change much. OPEC meeting. Yep. So now you got Wednesday, Thursday, and Friday. And of course, we're really interested in OPEC plus, but they do this and then they do the plus, right? So it doesn't tell us. All right, cool. 2-day meeting though. So maybe Friday is the plus. Maybe Saturday is the plus. Okay. Oh, I'm way back on Tuesday again. Thursday. Okay. OPEC meeting. Okay. Oil inventories Wednesday, OPEC Thursday, rig count Friday. Rig count doesn't happen till essentially the close of market on Friday. Okay? And rig count went way, way, way down, as you probably remember. So we'll see if they're coming online, and if so, how fast. Okay? Challenger job cuts. I put this in my model, by the way. It's actually Challenger, Christmas, and Gray job cut report. Okay? Isn't it nice to know these things? So I go here. Challenger, Christmas, and Gray. Challenger, Gray. Okay. And you can get their they've changed their website too. Great. I love it when people update their website to make it look cool, but now I can't find any information. So they send out reports, and apparently they're going to make it hard to find. So it's a high-end recruiting firm. But what the Challenger report reports is mass layoffs. Okay, layoffs. So it's not like a couple of guys lost their job because, the company's not as profitable, but they laid off like 200 people all at once. Okay? So Challenger, it's going to be here. So this will come out on Friday. Or is it Thursday? Is this one Thursday? Did it kick me all the way back again? No. Where was it? The Challenger report. There it is. Yeah, okay, cool. So it comes out Thursday, so we'll get a new one. And this is typically what you'll see. Planned job cuts announced by U.S.-based companies fell 57% to $34,000 in February from $79,000 in January. It was the lowest monthly total since December 19. Okay, so 34,000 people are likely to lose their job. You got to add that to your non-farm payrolls. So I wrote a whole report. It's on FX Street, many, many pages about how to create a model for non-farm payrolls. This is one of the things, this is one of my alpha pieces that I look at Challenger, Christmas, and Gray. And so let's say this was 50,000, but NFP, if the market predicted 200, I would say, okay, NFP is going to come out 150. Okay. So you have to subtract. Now, this is an improvement. We went from 80 to 35. So that's good. Okay. But these are mass layoffs, and they're still going to happen. Okay. So anyways, there's your Challenger, Christmas, and Gray. Initial jobless claims like every Thursday. Very cool. ISM manufacturing. Very cool. Not really one we care about, but okay. You might want to look at new orders, though. Okay. You always want to look at the subcomponent. So when I look at ISM non-manufacturing, I like to look at the employment subcomponent. Rig count coming out on Thursday. What the heck is that? That might be an error because they typically come out on Fridays. Weird. See, this is where we used to be. See, back in February 2020, we had 676 rigs. Then, right, a week goes by, 678, 679. And all of a sudden, right? And all of a sudden we were down to 180, 170. What? From 600, guys. From almost 700, we dropped to 172. Wow, huh? So we've doubled, but we're only halfway there. Okay? So you should know all these things, of course. Why it comes out on Thursday, I don't know. And then, of course, Friday, let's get out here. Holiday. Great. All right, so all of Europe is shut down, and the U.S. stock financial markets are shut down. So I don't think you should be trading, even though we got non-farm payrolls. So I'm going to do a quick one this year, even though it's my 180th, right? It's my 15th anniversary doing that one webinar. I'm going to cut it short. So NFP comes out, great, yada, 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 fine, good. Okay, then you get your, right, this is your, what do you call it again? CFTC, the, how come I can't think of it as something, what do you call it? Brain fart. What do you, a commitment of traders, sorry. Commitment of traders report. So you're going to look at that. Are they missing? Where's ISM services? It would be at 10, wouldn't it? Huh. If you play Minecraft, you know what I'm doing. Easter Monday. No webinar Monday, guys. ISM services on Monday. Tuesday. Is it Monday? Wow. Okay. So the most interesting thing is Tuesday's RBA. Yeah, we talked about it last week. Okay. So that trade's dead. We've traded it. Everyone's made their money, movedon.com. Okay. Last week's news, bro. All right. So that's that. If you like this calendar, it's part of tradersway.com, probably accessible from your back office as well. Okay. Let's move over to commodities. Yay! Okay. Now, the interesting thing is Europe is desperate to create inflation, and oil coming down is bad for Europe. It must be so frustrating to be part of their central bank, to have so little influence. And I said this, gee whiz, probably 2 or 3 years ago. I said if I was in control of the ECB and my number one goal was to create inflation, instead of bailing out countries, right, and adding stimulus to a dead horse, I would take all my money from the ECB and I'd just buy oil and drive up oil prices, and that would create inflation in every single European country. Maybe I'd fight the Russians and cut off their natural gas, and that would skyrocket energy prices, and inflation would go through the roof. And I'm like, boom, got it. Okay. So anyways, we're coming off the top here, back on the 60. You have to decide whether that's a trend for you or not. You can measure current market conditions. I don't know. You can do it this way, I suppose. So, yeah. All I can say is, like, if you were a bull and you bought it earlier, now you're waiting, right? If you're going to take it up for next month, you're in there. It's one of these situations where you have to be prepared to lose. Every trader knows that to lose is what we're really there for. Yeah. That's your play, right? Here's the thing. If I ask most people, show me your WTI plan for April, they would say, I don't have one. And then I'd say, well, stop trading. So I don't know what your plan is, if you're going to take that north or not. But if you had a plan, you got something to seriously think about it right now. One bit of alpha that I can tell you, if you look at how much Brent has gone up year to date, let's say, and how much WTI has gone up year to date, the spread is narrowed between the two. Oh, what are these? Okay. What do these tell us? Long versus medium term. Oops. Let's see. This way, that way, and that. Delete. Okay. Okay, we got this is where we are. So we're at the average longer term move. Okay, we're at the average price of the longer term move. And we are in a bullish move inside, right? So a medium bullish term move inside the longer term bullish move. And now we're in this situation where we have a retracement. Well, does it mean that the uptrend is over? And that's for you to decide. Okay? But you are speculating, does the downward in blue set up an upward in blue? Or should you be selling it down to 59? Okay? Okay. Well, Theta, once again, go to the EIA website, find out the seasonality of oil inventories, and then they'll also show you the 5-year range of the seasonality of oil inventories. And where are we currently now in the 5-year average of seasonality inventories? And if there's a shortage that we have now or foresee in the near future, then oil prices will go up. Or if there's an increase in demand, right, that will push us in the ebb and flow of the 5-year average of seasonality in the energy market. And therefore will tell you, is this underpriced or overpriced or fairly priced? But to me, to just show you a chart like this and give you an answer is meaningless. You have to first know if you're a bull or a bear. Okay. If we close below the blah, 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 you're still thinking pure technicals. You're still missing a point. Are you a bull or a bear? If you're a bull, you buy it. What's the problem? Now give me 3 reasons why you're bullish. It shouldn't be a problem. Well, let me get you this information. Boom, here it is. I'm a bull. Oh, great. Well, you buy a dip. What's the problem? Oh, well, if it does, no, dude, are you a bull or not? Then are you buying a dip or not? Great. Dip at what? Do you have a pivot level? Do you have a psych level? Do you have any reasoning whatsoever? So Fibonacci says the sweet spot is in here. Pivot points said based on what happened last month, we have here. Okay? Based on your analysis of the energy complex, again, supply and demand right now, supply and demand in the near future, supply and demand in the long future, supply and demand based on seasonality, and supply and demand now and the near future within the 5-year historical average of seasonality. We'll tell you whether you buy it here or not. If you don't know any of that, then you don't know what to do, and that's the problem. Then you're like, well, if it closes below here, dude, nobody cares. Okay? I'm using this to say, well, okay, this is the mean. The medium term, I guess I would call this, right? Or on this setup, the long-term mean. So I'm not below average, I'm not above average, I'm average. But it's also the mean has a positive rise over the run, so we also know it's bullish. And I have a fundamental outlook for global demand. So I could show up and say, for example, if I was a bull, I could show up and say, oh yeah, I'm going to take a shot here. That's my plan A. It's not a problem. Done. Plan A. Already have it done. That's my plan A. Well, what about plan B? Well, I don't want to be down here. I don't want to be down here. And I don't know. If we're down here, I don't know. I'll have to reassess fundamental and market conditions because I don't really want to be down here. I don't want to be down here. I don't want to be down here. So I come back to my scenario. If I'm a bull, I already have April planned out. So I'm actually quite happy. I'm like, cool. So if I buy here, it'll go up. And if I'm wrong, it's going to come down here. I'm going to take a small loss and it's going to head all the way down here or maybe even lower, but I won't be in the market, so I don't really care. My job is to get in my trades. Oops. Oh, hang on. It's doing something freaky. I clicked a button. There we go. Okay. My job is to get in my trades. If I'm looking at my charts to make the decision, I don't get it. Your charts don't tell you anything but price or time. Okay? So at the very least, okay, and one of the themes I've been talking about with the swing trading group is that we're in this period of time where at the very least I got to play it like we're in a range, but I'm leaning in to a planned future breakout. So if I get a plan A today, cool, awesome. If I don't get a plan A today, I back the heck off. Because I know what I want. I've already planned on it. I already know why. And I'm asking the market to prove to me. Okay? Do you see? So maybe we need to deal with oil inventories on Wednesday, OPEC on Thursday and Friday, and rig count on Thursday, which is, I don't know why it's on Thursday. Honestly, I thought it was Friday at 4. So maybe it's a glitch in the matrix or something. I don't know. But we got a lot of work to do on WTI this week. Okay. So how about this? At the very least, I think you could look at this and say, somebody thought this was a terrible place to buy. And maybe the same person said, you know what? I should probably take some profit before we go into the OPEC meeting. And maybe by next week, I will be able to buy this at $60 a barrel and take it north. Okay? So that's somebody's trade plan. Seems pretty logical to me. The issue is, what's your trade plan? Okay. Be like one of these things. If you were trading oil and you didn't know there was an OPEC meeting, then you're not an oil trader. You're just a market participant. And then in some cases, if you're just a market participant, very often you're going to be a liquidity event for people that do know things like the OPEC meeting is coming up in a couple of days. I should lock in some profit. Okay. Coolio. Take a look at gold. Remember, I'm waiting and waiting and waiting and waiting. I'd like to be a bull on gold, but I'm not now. Okay. So once again, I'm looking at this sideways move, and I don't have permission yet. I've created this zone. Again, I did it last week, so you guys should already know all of this. But what I'm waiting to see is evidence. I'm asking the market to prove to me that it's become bullish. Okay, that's one scenario. And that's another scenario. And when I feel like it's turned bullish, I'll see, like going back to answering this question of why using regression channels and stuff. Well, I'm looking for, right, M to be, right, greater than 0. Right now, M is less than 0. So right now, the slope is this way, as you can see, right? That's what these blue ones. And I want to wait for them to turn this way. At that point, M will be greater, right? Rise over run. Okay, so you'd have to do this way. M equals rise over run, okay? And rise over run will be greater than 0. Therefore, it's bullish. You see? So at that point, I can start doing things like buying dips. I won't get dips if the rise over run is less than 0. What do I get in that case? If rise over run is less than 0, if I don't get dips, what do I get? If it's not a dip, what is it? Then it's a drop. Okay? There's a difference. These are drops. These are dips. No, no. Yes, yes. Okay. Aha. I know, right? All right. So it looks like trading Forex candle patterns inside the wicks day trading strategy should be up on YouTube. We went through the calendar. We went through commodities. Oh, I guess we need to do Bitcoin, right? Here's Bitcoin. Here's your 618. As you know, we're on our way to 65. So we've now gone from 50 to 58. We planned that out a month ago. You're welcome. Cool. All right. So please click the like button if you enjoyed even a little bit of today's webinar. I'd like to thank Traders Way for being part of our community of 17,800 foreign exchange traders around the world. Please give them an opportunity to earn your loyalty and respect. They'd like to be your execution partner. Okay. I highly recommend that you, in the recording of the video, that in the comments section below the video that you write down key takeaways from today's live stream so that you can search them in the future and find out very specific things like candlestick patterns. Okay, so maybe today you say candlestick patterns, trading inside the wicks. Okay, that kind of stuff. I wrote a book many years ago because traders said, Wayne, write a book. So I wrote a book. And then people said, Wayne, do video courses. So there's 50 hours of video training courses on fxbootcamp.com. Wayne, do a live trading group and just hold my hand and teach me. Well, there's that. So when you sign up for the videos, it'll ask you if you want to upgrade your account. It's $99 a month. I used to charge $300. So it shouldn't be a big deal to join our live trading group, but that's where I teach you how to swing trade. Great. What else? Live daily streams are here every day. My candlestick, my MT4, MT5 chart templates are the link is in the description below. So if you need resources to improve your trading, it's all been created for you because there's been literally tens of thousands of Forex traders before you, right, over the course of the 20 years I've been doing this, that have asked for the same things you're asking for, so they've been created for you. So they're there. Reach out and ask for help, and then be strong enough to receive the help. Peace on earth. May the pips be with you. May your profits be above average. Thank you, Maida. I appreciate that. Wayne, is your book like your videos? Yeah, some of it. Yeah, some of it. It's not like a rehash. But in one of the courses inside of FX Bootcamp is called Strategic and Tactical Forex Trading, which is also the name of the book. So it doesn't sort of repeat the book, but it covers sort of the same ideas from different points of view into like pulling the trigger and stuff. But then, that's only 4 hours or something. There's 50 hours worth of stuff. So day trading, swing trading, fundamentals, soon macro, it's all there. So anyways, peace on earth. May the pips be with you. May our profits be above average. Have a wonderful week, and I will see you